Hi, everybody. I'm really thrilled and excited to be here with Express and Express's management team. It's Oliver Chen. I'm head of retail, new platforms, and luxury goods, equity research stock coverage at Cowen and Company. I'm a graduate of Wharton and Georgetown and an adjunct professor in new retail at Columbia Business School. I've been in the industry over 20 years, starting off with my parents' retail business in Natchitoches, Louisiana at their gift store. So today we have the CEO of Express, Tim Baxter, Matt Mollering, the COO and EVP of Express, and Perry Pericleus, the SVP, CFO, and Treasurer. Tim, Matt, Perry, thanks for being with us today. We appreciate it.
Thanks for having us, Oliver. It's great to be with you.
Tim, so what is the Expressway Forward strategy? You've really evolved to incorporate purpose, community. Could you give us an introduction to your company for those who might be newer to the story?
Yeah, absolutely. I'd love to. So I joined Express just over 2 years ago, after several years of sort of lagging performance on both the top and bottom line. And when I joined, I had three very clear objectives. One was to establish a corporate strategy that would move us forward as a company. Second was to assemble an exceptional leadership team that could not only inform the strategy, but then could also execute against the strategy and deliver the results that we put forth. And then third was obviously change the momentum of the business, which, as I said, had been lagging. And so in January of 2020, we launched the Expressway Forward strategy. And at that point, we had assembled most of our leadership team, and very, very proud of the team that we assembled and how they informed the strategy. So we launched the strategy. We used the moniker EXPR, which is obviously our stock ticker symbol. And so I'll go through quickly what EXPR stands for. I think it's the best way to just sort of lay out the strategy. E is engage existing customers and acquire new ones, so customer. X is to accelerate our sales and profitability. P is by putting product first, and R is reinvigorating our brand. So in a nutshell, the Expressway Forward strategy is to engage our existing customers and acquire new ones, to accelerate our sales and profitability by putting product first and reinvigorating our brand. So that's it. So that there's those four pillars of the strategy: product, brand, customer, and execution ultimately. And we made tremendous progress on each one of those, even though COVID was obviously a gigantic, I call it a detour on the Expressway Forward. We launched the strategy in January of 2020. We closed every store about 6 weeks after launching the strategy. But I'm also very proud of the work that the organization did. We were able to stay very, very focused on the transformation of our company. We talk about transforming the company from being known as a store at the mall to a brand with a purpose powered by a styling community, with those four foundational pillars at the heart of it all. And during COVID, we were able to stay very focused on that and make extraordinary progress across each one of the pillars, while also obviously having an intense focus on liquidity and managing the finances of the company through the crisis. And what I would say is that we have emerged much stronger, and our second quarter results, I think, are very strong indicators that our strategy and all the work that we've done are working. Customers are responding, our transformation's well underway, and all of that gave us the confidence to commit to our longer term goal, accelerating sales and profitability. So we committed in August to our longer term goal of delivering $100 million in operating profit by 2024 and over $155 million worth of EBITDA. So we're going to be a very, very different company than we were when I joined a couple of years ago.
Tim, what would you say is most underappreciated in terms of factors from investors and those who don't know about the new Express versus the former one?
Yeah, I'm not sure if we're underappreciated, Oliver, as much as we're sort of under the radar. I'm just not sure that as many investors sort of understand the Expressway Forward strategy, the impact that the Expressway Forward strategy will have on the company, and how it moves us forward. and the complete transformation. So I think it's more that people aren't aware of all of the great work that's been done and the new Express versus being underappreciated. I think, like I said, our performance had lagged for a couple of years before I joined. And I think, slowly people just lost track of the story. And then obviously during COVID, retail wasn't necessarily something most people were looking to invest in. But, so I think that's underappreciated. I also think the fact that, I said it, we've been known as a store at the mall. When I joined the company, I would say what I was going to do, and people would literally say to me, "Oh, the store at the mall." And I'd say, "Yes, that's part of it." But we're also going to drive $1 billion in e-commerce demand by 2024, and we're well on our way to achieving that stated goal. So we're a very, very powerful force in the world of digital commerce as well, and moving forward with that as well. So I just think that it's we've been under the radar. So I appreciate the opportunity, an opportunity like this, to reach out to your investors to share our story, because I think when people hear our story and hear that we're going to drive $100 million in operating profit over the next few years, it changes people's perception.
Matt, maybe you could brief us about the store base and where the store base is heading, and also digital penetration and how these channels will work together. So there's about 5 questions in there, but what's happening in the future of physical?
Sure, absolutely, I'd be happy to. So basically what we have seen to date is that we have approximately, we announced the 100 store closure at the end of January as part of our overarching fleet rationalization program. We've now moved to fleet optimization. So as we're coming out of the pandemic, and we have reinvented our brand, and we have addressed the product and infused fashion back into a brand that is supposed to be focused on fashion. It's resonating with our customers. We are now looking at our store fleet anew and looking more at fleet optimization. So we're starting to see some really good traction in our store fleet from a performance standpoint. So from that perspective, we want to give it a little bit more time to really understand the winners and losers coming out of the pandemic from a mall-based standpoint. But we have our sights set on the malls we need to be in to make sure that we have the brand presence that is necessary. Stores still will play an important role in the business. And with that, we are trying to reinvent our in real life experience in the store to make sure we're creating confidence and inspiring self-expression for the customers, our brand purpose, and then also creating a styling community experience within our stores. So we think there are big levers to be able to do that. That being said, we feel our store fleet potentially is in good shape, but we're reassessing that as we go over the next 6 to 12 months. With that being said, we did downsize our King of Prussia store, reduced square footage by over 45%, and saw a positive comp in that store in the month of July that we announced on the earnings call. We're also downsizing a second store as well, North Park in Dallas, and to see if we can get similar results. So we are seeing that when we reduce square footage, we can increase productivity significantly. That could play into our future plans from a real estate perspective. And we've also introduced Express Edit stores, which are smaller square footage stores, typically off mall, in opinion maker locations with a curated assortment. And those stores, we have 5 open, and plan on continuing to open more to learn about this new concept and what it means to the brand, both from a sales perspective in total, but brand acquisition, brand awareness, as well as what it means from a productivity perspective off mall. What we're seeing to date is that we are seeing customer acquisition, almost 50% of the customers coming into the brand in these new store formats are new to the brand. And we're also seeing about a 20% of the customers that are reactivated from our store base that had lapsed. So initial signs look very good, but we're still in the pilot phase of this, and we'll look to add that to the mix of what our fleet optimization looks like over the next 6 to 12 months.
Thanks for those comments. Perry, what about liquidity? Could you update us on the latest with your liquidity status? And also, you've had really encouraging momentum and gross margins. What about the near-term gross margin versus longer term and your vision for different leverage points in that line item as well?
Absolutely. So from a liquidity standpoint, we feel very comfortable with our liquidity. We ended Q2 with over $130 million of excess availability. Including that, we paid down in Q2 about $111 million of debt during the second quarter. So as you can see, based on where we ended with the excess availability, how much debt we paid down, we feel very comfortable with the liquidity, especially as we look at what's coming ahead of us and the performance that we're seeing in Q3. As it relates to gross margin, we expect gross margin in the back half of the year to be approximately 200 basis points higher than 2019. Even with that, that includes the headwinds from all the transportation challenges that we're experiencing and the industry is experiencing. And that includes about $15 million of incremental air costs during Q4. As it relates to the go-forward gross margin, we're expecting gross margin, as you look at going out all the way to 2024, to continue to expand. And part of that would be the merchandise margin expansion of anywhere between 100 to 200 basis points, and then buying and occupancy leverage. That leverage is going to come from growth in sales, as well as the expense discipline that we have had and the reduction in expenses that we have seen. So from a buying and occupancy, we're expecting anywhere between 450 to 550 basis points improvement in our buying and occupancy, leading to that 550 to 750 basis expansion of gross margin in the long-range plan. Significant improvements that we're expecting over the next few years.
Thanks so much, Perry. Tim, asking you about customers, there's this theme of new customer acquisition. You've had really good momentum here in terms of new customer acquisition up 17% and reactivation of lapsed. How will you captivate these new customers? What do you see ahead for the opportunity here?
I think this is one of the biggest opportunities, quite honestly. And, as you said, we have been bringing new customers into the brand. As Matt said, our new Express Edit stores, 50% of the customers in those locations are new to the brand. Another 20% are reactivated or lapsed customers that haven't been with the brand for quite some time. And as people emerge from the pandemic and are exploring apparel again, many of them are discovering the new Express for the first time. They haven't seen the radical changes that we've made in our product offering. They haven't seen that we have reestablished ourselves as a leader in fashion. They haven't seen that we have reestablished core businesses like body contour and denim, and done it in a way that makes us competitive, from my perspective, with any contemporary brand out there at literally a third of the prices in some cases. So as they're discovering it, they're obviously reacting, responding, and purchasing, and doing so at much higher average unit retails than we have historically seen. Our average unit retail in the second quarter of this year was up 25% to the same quarter in 2019, which speaks to the elevated level of product, not only to the elevated level of product that we've put forth, but also to the pretty dramatic pullback on promotions. So the other thing that we did, was relaunch our loyalty program. And that has been a huge win for us. We relaunched it, renamed it Express Insiders. There are now 4 tiers. There were previously 2, so it's easier for people to get to that first tier and earn rewards faster. So we're seeing dramatically increased engagement from folks in our loyalty program, and are adding to the loyalty program at double-digit increases versus 2019. And the loyalty program will be a key component for us as we move forward on how we engage and interact with our customers. So, we called it Insiders because we intend to include customers in our journey. They are a critical part of everything that we do and play a role in everything that we do, up to and including the development of product. We've actually had 3 product capsules that we co-designed with customers. The last one we actually pulled from our VIP tier in the loyalty program and did virtual meetings just like this, where we talked through product categories, what their expectations were for those product categories, what they'd like to see, colors they loved, fits they loved, all sorts of things. And the customers actually worked with our design teams to develop these product capsules. And they've been among our best selling capsules thus far. So we'll continue to do that. We're going to continue to engage customers very directly in the development of the product. And we've also launched community commerce, which is a cornerstone of driving our $1 billion e-commerce strategy. And that community commerce program is another way in which we're going to really engage customers very differently than any retailer right now is engaging with customers. And that gives our own customers the opportunity to become style editors, to build their own Express storefront, and to sell Express product to their communities. That's the way we're going to build this styling community. We're in the pilot phases of that. We're in the processes of really ramping up and hiring some additional style editors. So I'm also very, very excited about what they're going to do to sort of build this styling community. And that's an important theme for us as a brand. Our purpose is to create confidence and inspire self-expression. We're going to do that through this styling community that supports one another. So customers at the center of everything we do.
Tim, a lot's been happening in the product assortment, also the environment and what consumers want. Could you brief us on key trends you're seeing and how you're executing to them? Related to that is this period of back to school, back to work for everybody. And I think it's interrelated with what you're doing and what you're seeing.
Yeah, absolutely. Look, we've completely transformed our assortments. And, when I started, Express approached product in a very compartmentalized sort of way. There was a team of people that developed product that was for where to work. There was a team of people that developed product that was for going out. There was a team of people that developed product for casual. And the reality is that's not how a customer views their wardrobe, builds their wardrobe, sees their wardrobe. And that was happening pre-pandemic. I would say that has accelerated as we've moved post-pandemic, and that people are looking to build a wardrobe of versatile pieces that work for them in a number of different ways for a number of different occasions, depending on how they style them and how they wear them. So our approach to product is completely different and much more modern approach, the way customers really build their wardrobes. So that, I think, is a trend that has continued, this idea of versatility and that, I need things that work for me across multiple different wearing occasions if I'm going to invest in them. From an actual product perspective, there are a number of trends that are really interesting. I think we are in women's seeing a complete change of proportion. That had begun to happen pre-COVID. It sort of stopped during COVID because the whole idea of leggings and a big oversized top became comfortable. And, so I think, and that's what had been trend right for a very long time. More fluid, larger bottom, and a much more fitted top. So the proportions are changing very dramatically. We've had incredible success in our body contour program for women. We started the second quarter with 100,000 units. We ended with 1.5 million, and we're continuing to ramp it up based on the extraordinary success we've seen there. And that is, a fitted silhouette on the top. And the uniform for a young contemporary woman has literally become, body contour, so fitted top with a new leg shape in denim. We're seeing skinny continue to slow down and become a smaller percentage of the business as new leg shapes are accelerating. Straight, flare, boyfriend, mom, all those wider leg shapes are really accelerating. And our customer is savvy enough to throw on a blazer for work, take off the blazer when she's going out that night. And, so very excited about that. Men's side, it's the same thing. We're actually seeing the most versatile parts of our men's assortment driving incredible results. Men's polos, I say all the time, that's like the most versatile shirt a guy can own. Our polo business is on fire, really unbelievably good. Same thing's happening in men's denim, actually. It's getting a bit wider, a little bit more dressed up. So we're seeing those across them. All that being said, if you look at our second quarter results, we were driving great results in those categories that I just mentioned throughout the quarter. The real change came, and we started driving double-digit comps versus 2019 at the end of the quarter. The real change came when categories that we have historically been very powerful in and very well known for, like men's suits, men's dress shirts, women's dresses, women's dress pants, women's blouses, the real change of momentum came as those businesses went from being down double digits during the pandemic, in some cases 50 and 60% during the pandemic, to flat by the end of the quarter. And then we're seeing that acceleration continue. So we are seeing people truly rebuilding, professional and going out type wardrobes, but they're doing it with really versatile pieces.
Tim, what should we know about holiday? How will this holiday be different, and what are you seeing in the marketplace, and what are you doing differently in terms of how you're executing, to both Black Friday and the holiday period?
Yeah, well, I think execution has become a real challenge, to be perfectly honest, given the supply chain challenges and logistics challenges around the globe. I think we as an industry are facing many of those, but we have been facing those throughout COVID, and I think our team has done as good a job or a better job as any at mitigating those challenges, and we are well prepared to drive, to continue to drive comp increases as we move into the fourth quarter versus 2019. I do think that it's going to be a different fourth quarter than what we have seen recently. First, I think it's going to be more celebratory. I do think that, we had all hoped actually that last fourth quarter was going to be celebratory, and we saw, spikes in COVID that dampened that. That continued into the first quarter until vaccinations began to ramp up. But we are seeing much more celebratory behavior, both anecdotally from our stores telling us that everybody coming in is getting dressed up to go to some occasion. And then we're seeing it in the results, obviously, like I just said, in men's suits and dresses and blouses. So I do think it's going to be a very celebratory fourth quarter. And I think that, those more dressed up categories are going to continue to gain momentum. Because I think people feel really good about getting dressed up again and just sort of want to get dressed up again. So that I think will drive self-purchase. I also think it's going to be, a powerful gift-giving year. Many people did not have their traditional holiday gatherings last year. And I think that there is a real desire and a real movement to really celebrate those that you love, to celebrate those people, who've been the constant in your life over a couple of really challenging years. So I think we're going to see an incredible gift-giving season as well as we move into the fourth quarter. And, we've launched some great new initiatives and strategies I'm not going to talk about yet, but I think we'll be grabbing market share in a lot of gift-giving categories as we move into Q4.
Exciting to look forward to that. Supply chain's been an industry issue for sure, as well as inflation and speed and product availability. Could you speak to that and what you're seeing and how you'll do your best to mitigate these risk factors?
Yeah, it has certainly been a challenge. We have been very aggressive about positioning our inventories for the fourth quarter. And like I said, I'm very confident that we will be well positioned as we head into the fourth quarter to continue to drive comp increases. That being said, it has come at a cost, that was not originally anticipated in our strategy. As Perry mentioned, it's about a $15 million cost to air product here. But We've been very prudent about what product we've chosen to air, what product will stay on a boat, and we're managing that, daily, literally daily, almost hourly. Logistics team has done a phenomenal job of that. And so we'll begin the quarter with an appropriate amount of inventory to drive that comp increase. The composition may not be exactly what I would like it to be early in the quarter, but as we move into the critical November, December time period, later in November and then the December time period, I'm very confident we're going to be very, very well positioned. We've also gotten very aggressive about a post-holiday strategy. Our customer, is a fashion customer and responds to newness. And we have not done January product deliveries, new fashion deliveries in January historically. And we tested it last year, and even last year in the throes of the pandemic, it was an incredibly successful strategy for us. So we've dramatically expanded our approach to January and expect to be able to drive great increases as we move into January as well.
That's very exciting. And newness is definitely something the customer loves.
Yep.
Tim, would love your thoughts on some of the key digital initiatives we should focus on and that will be important and drive your business as well. And then also, what do you enjoy doing the most? Like, what's your favorite part of the job?
Or maybe I should let Matt and Perry answer that. But so I'll start with digital, and then I'll get to my favorite part of the job. I'm really, really excited about our entire digital strategy. As I said, we put a stake in the ground. We're going to drive $1 billion in e-commerce demand by the time we get to 2024. And there are a number of things that we've already done, some sort of foundational things, including completely replatforming our website, in the fourth quarter of last year. All sorts of enhancements that we've made to the website to drive conversion. We've got our product pages are miles ahead of where they have been. So there are a lot of execution things that we've done in e-commerce that have really accelerated the performance of that channel. We've also, really linked our marketing to our product strategies, which has also helped us drive the e-commerce channel very aggressively. But the thing I'm most excited about, honestly, in digital is what I mentioned earlier. That is the launch of community commerce, and how that is going to drive our digital business and be sort of a cornerstone of our digital business and a real differentiator for us in our digital business as we move forward. So I enjoy the digital piece of the business, but my real passion, I guess I have to be perfectly honest, my real passion is product. I have a background in merchandising, spent my whole career in merchandising across virtually every category of merchandise. And, I love, identifying trends and market share opportunities, and then figuring out how those trends relate to, a really broad population. And it's always exciting for me to, I said earlier, I would put our product assortments, I would rack them up against any contemporary brand right now. And it's always exciting to me, to get an email from Mr. Porter and, click through and see that, we have a product that's very, very, similar from a trend perspective to what you'd find on Mr. Porter for a fraction of the price. Because as we all know, it's a very small segment of the population that can afford to shop at Mr. Porter. So that part of what's always been really, really exciting to me is being able to bring great quality product that's on trend to America, to a broader audience.
Tim, agility has also been a cornerstone of what you're doing and accomplishing. Could you speak to how that's impacting the organization and your strategy? And also if you or the team had any closing remarks as well. Thank you.
Sure. Speed and agility. That was a huge part of the Expressway Forward strategy. The transformation of our go-to-market process actually included a reduction of about 25 to 30% of our lead times. And, so we executed that throughout the pandemic. What I would say is that has been our saving grace as we've moved through these most recent logistical challenges. Because we developed a more agile organization, a more agile go-to-market process, we have been able to pull levers that honestly wouldn't have been available to us a couple of years ago, because our process took so much longer and was so much more cumbersome. So we are operating with greater speed. Everything that we did when we reconstructed the go-to-market process was about being able to operate with greater speed and respond to consumer demand with greater speed and agility. So we've been able to move much, much faster. We've been able to react to trends like body contour. That was a test that we ran in the first quarter, and we were ramped up to over 1.5 million units in our inventory based on the success of that trend just 6 months later, with all the challenges that we're facing in the supply chain. So, I would say we are a very agile, very fast company when we need to be. And there are other categories that we know we can plan further out and make more money if we do that. And we've done that in those categories like men's suit separates, categories like men's dress shirts, where, we can go long on some of those categories, and it gives us the opportunity to be much faster in other more fashion-driven categories. So it'll continue to be a challenge. I think, like I said earlier, our team has met the challenge as well or better than most, and we are well positioned. And then just from a closing perspective, I would just say, number one, thank you, Oliver. It's always a pleasure to be able to spend time with you and get your perspective. We always appreciate that. And, I would just say that we are, from my perspective, a really exciting investment, and a brand to watch in retail. We are, I've put a stake in the ground and said we are going to reclaim our position as a real leader in fashion specialty apparel. And we're going to do that while driving significantly better profitability than what we've done in the past several years. So we're going to hit that $100 million mark and drive over $155 million in EBITDA. And I think that makes us a really compelling investment.
Well, Tim, and team, Matt, Perry, Greg, it's great to see your exciting innovation, to hear about the product, hear about the store base, and also how you're captivating a new generation. Fashion is fun and innovative and embracing and emotional and also functional. So it's really nice to share these ideas together. Thank you very much.
Thanks, Oliver.
Bye, everybody. This concludes our presentation. Thanks for tuning in.